Let's bring in investment analyst from AfriInvest, Eremonsele Aziba, to review the markets with us. And of course, investors, what likely will be driving investors' sentiments going into the new week, which happens to also be the last trading week for the month of March. Good morning to you, Eremonsele. It's great to have you on the show.
It's nice.
So we started the week on quite an interesting note, even though most investors had actually factored in the CBN's probable stance, the Monetary Policy Committee, I beg your pardon, stance on rates. So we had the Monetary Policy Committee meeting Monday and Tuesday, and we also had OMO auctions this week as well. So talk to us a little bit about how most of this actually shaped investors' sentiments for this week.
Okay, thank you. What we saw in the market was a quite bullish start to the market, especially looking at the fixed income market. We had a lot of buying interest on Monday and Tuesday, but we also saw some sort of liquidity squeeze in the market owing to the debit of the OMO auction that was carried out on previous Friday, as well as the debit for the special market intervention fund by the CBN, and this sort of squeezed liquidity levels. So on Wednesday we saw some sort of reversal in market trend as we saw a lot of selling activity as opposed to what we saw at the start of the week. But as regards the MPC decision that was made, we strongly believe a lot of investors had already factored this into their investment decision, so we didn't necessarily see any knee-jerk reaction from the decision.
But one thing we've noticed since the beginning of the week is the forceful convergence between at the currencies market now, between the official rate and of course the street rate. As at yesterday, at the interbank over-the-counter, we had the naira at 308 naira to $1, and at the parallel market it was fluctuating, but somehow ended at 400 naira at the end of the day. But coming into the studio now, I heard that has changed. That's about 300, it's around 385, 390 naira. So is it time for investors to get excited now about the markets, or is there anything else that you feel is actually driving this?
So what we're looking at is with the a lot of concerns have been raised as regards the sustainability of this new drive by the CBN to continue to intervene in the market. But we've seen it carry on for about a month now, and we've seen rates fall from about 520 naira down to 390, like you said. So that massive spread that used to exist between the official rate and parallel market rate has also been reduced. But what we're seeing is, looking at some of all the other macroeconomic fundamentals, looking at GDP, inflation, even though we had a contraction in February as a result of a high base effect, most of these macroeconomic indicators still remain rather weak, and this has sort of weighed on investor sentiment. So there's still a lot of investors who are waiting on sidelines to see if there's some sort of structural improvement that could stoke their appetite for Nigerian equities, and then we can see a return of investors.
So what factors really affected investor sentiments this week? Because from the equity side, we've talked about the fixed income side of things now, but from the equity side, we still saw a trickle of results coming in. Some were quite impressive enough to excite investors, but some not so much. Yeah,
so what we've seen is we've seen a lot of speculative short-term trading by investors over the past weeks. What we saw this week was the market actually opened positive on Monday, up about 7 basis points, which extending the bullish run which began in previous week to the 5th consecutive day. But on Tuesday we saw a reversal in this trend when the market dipped. Same thing on Wednesday as well as Thursday. So likely attribute this to profit taking by investors in counters that had appreciated in the previous week. Nevertheless, despite the declines that we've seen, we've actually seen the level of declines contract as the week went on. Like you mentioned earlier, the market was rather unchanged yesterday, and we believe that we might see some bargain hunting today, so the market might actually appreciate today. But in terms of looking at the week-on-week performance, we still expect it to be in negative.
And that's a little, well, investors actually, well, most market watchers actually expect that to be happening, especially as you already mentioned, profit taking across most of the major market counters. But in terms of sector specific now, give us your assessment of how the various sectoral indices have actually fared, at least for this week.
So we've seen in the industrial goods index, following the results, that the WAPCO Lafarge result that was released, which was broadly better than expected, we've seen a lot of investors take position in this stock, and this has lifted the industrial goods sector, as Dangote Cement, which is largest capitalized stock, has remained rather unchanged during the week. So the industrial goods sector has been one of the good performing sectors. Looking at the banking sector also, at the start of the week we had some buying interest in some of the banking bellwethers. But as yesterday, we saw sell-offs across most of the tier one banks. So this sort of led to a reduced performance in the sector. So across most of the other sectors, we've seen a rather flattish performance week on week, given that we saw some appreciation at the start of the week and we started to see some declines now.
Ermonsele, we're going into the last trading week, effectively for the month of March, and looking at the way March has been, would you say it's been an interesting month for investors, well, year on year?
Looking at the performance, we believe it's been broadly shaped by the expectation of earnings releases that have come out, which haven't really been too impressive. I mean, it's majorly the tier one banks that have actually released impressive results. So I think it's investors who have taken position in these counters that would have benefited majorly from market performance during the month of March.
And we also had the FGN savings bond.
And we had the FGN savings bond.
That was quite also an interesting time of the market.
Which was quite. It was greeted well. I mean, there was like you mentioned earlier, over 2 billion worth of subscription to the instrument. And the next one will be launched next month, and we expect to see increased interest in this instrument.
And of course, they're coming to the Nigerian Stock Exchange next week to list it.
To be listed also. So it's quite positive for the market. All we can hope for is that investors actually take advantage of this. And we expect to see some improvements.
All right, so fingers crossed on that one. Ermonsele Aziba, investment analyst with AfriInvest West Africa Limited. Thank you so much for coming on the program this morning and wrapping up the week for us.